Hi everyone, this is the Impact Factor, and another thing that I want to talk to you about today is the state of the quantum address. So we had a rally, a pretty significant one actually. I got two margin calls today. I'll just lay it out there. And the reason is I've taken positions that are too big, and quantum rallied, and I got margin called. I'm fine. I liquidated parts of my positions. I transferred some more money into my account, and I'll survive and I'll live to see another day. And that's what trading is about. You live and you wait until money comes to you. You sit down in the corner, like one of the most famous traders mentioned in Jack Schwager's book used to say, you sit down in the corner and wait. And when there's money lying on the ground, you get up and you go and you pick it up. And this is exactly the situation with quantum. I am fundamentally a quantum bull. Quantum will be eventually a useful technology. The same that cars were to be envisioned in 1910. But cars, as we know it, have been a terrible business. Companies that are making cars have been losing money because they require a lot of capital investment, because they're hard to make, and because there is a ton of competition. Just because something is a good idea, just because something is interesting, doesn't make it a good business, and it certainly doesn't make it a good investment. Now, what I want to talk about is these four publicly traded quantum companies that a lot of people are in. So you have IONQ trading currently at 42, which is a market cap of 15.7 billion US dollars. Would you take a guess how much revenue this company has? Almost zero comparatively to what their market cap is. 130 million, in fact. So that's a multiple of 113. That is ridiculous. Same thing goes on with Rigetti. Rigetti, which is now trading at 18.9, almost $19, which is up from 13 just a couple days ago, is a 6.3 billion US dollars of a market cap. This company has 7 million in revenue. Keep in mind that all of these companies that I'm mentioning here, just because they have revenue doesn't mean they're profitable. Matter of fact, they're far from it. Some of them are actually losing revenue. I will get to that. QBTS, D-Wave, which doesn't actually have a quantum computer. They don't do quantum computing. They do services. It's a consulting company. You can't get anyone who's used their machine for commercial purposes. It's impossible. $20, 7 billion company with 25 million in revenue. 25 million in revenue for a 7 billion company, a multiple of 253. And last but not least is Quantum Incorporated. Is that the name? Quantum Computing Incorporated. It was just at $6. Now it's at 9.28. That's a 2 billion company with how much? 682,000 in revenue. Some of you people out there make more than that a year, just you personally. And here's a company making 682,000 a year worth 2 billion. That's like valuing your next door neighbor who's a doctor at 2 billion. That's ridiculous. A lot of these companies, now Quantum Computing Incorporated in particular is one of my favorites because it's a beverage company turned quantum. And some of them actually used this bonanza for free money that we had when at the end of 2024, these companies moved from $7 here for IONQ up to 85 almost a year later, and they started printing shares. And if you know anything about the balance sheets, you will see that. So if we scroll down here, this is a balance sheet for 2025. We see that additional paid-in capital, which is basically money that you got from issuing shares, is now at 5 billion, up from $1 billion a year ago. So in a year, this company issued 4 billion worth of shares, and there's nothing wrong with that. If you're a good CEO and you're
stock is trading at an unreasonable price, what you will do is you will issue shares because you need cash, because you know that there is no business that's going to come and save you anytime soon. Revenue is barely there. And actually, IONQ, which is growing significantly, 200%, 98%, 95%, that's great. But that's coming from acquisitions. What was surprising is that IONQ acquired Oxford Ionics, which is one of the best quantum computing companies there. But just because you acquire a good company doesn't mean that your old wreck of a company, which is run by not the smartest people, is now all of a sudden worth something. Why? Because there's nothing behind quantum. Quantum computers are slow. That's a thing that a lot of people don't realize about them. People think that quantum, wow, that's like NVIDIA. That's like playing CSGO at 400 FPS and it takes almost zero energy. No, it actually doesn't. Quantum computers are very slow. The gate speed is low. The flow of information is low. I'm no quantum expert, and I can't really explain to you why they suck. But there is no business for them. There's only a few algorithms that you can run on quantum computers. I know it enough to understand that there is no business there. I don't know it enough to explain it to you. So you are better off watching a couple hours lectures video after this video. There's only two algorithms that we know that can actually be run on a quantum computer right now. That's Shor's algorithm and Grover's algorithm. And Grover's only offers you a quadruple speed up in complexity. So that's nothing really crazy. And Shor's is good because it converts polynomial time, exponential time into polynomial time of computing for factoring numbers though. And there's not many companies that need to factor prime numbers. And that's what quantum is good for. This explains it, why there is no revenue there. Remember a year ago when the CEO of NVIDIA, Jensen Huang, this was here. So IONQ was trading at $50 and then it dropped instantly to 30 in a single day because the CEO of the biggest computing company in the world said that there is nothing behind quantum and they're not pursuing quantum. The only way in which they pursue quantum, and this is the same way IBM and Google do it, is on an exploration basis. It's sort of like you have a crazy chemist in your basement, and every couple of years you check up on him whether he came up with a way to turn turds into gold. And, you know, there's no harm in trying, but he probably didn't. And this happens every decade or so, actually. There is a quantum winter when nobody's interested in the topic, and then there is a summer, if you will, a spring, when people all of a sudden figure, now is the time, quantum is now. It's pretty ironic that if you go on the website of IONQ, it's actually going to tell you that quantum is now. Where is it? Where is quantum now? Rigetti's revenue dropped 34% in a single year. IONQ's revenue is up 200%, and that's great. But if quantum is now, why is your revenue 130 million? That's like a revenue of a small shopping mall. What are you doing? This is quantum. This is supposedly what the government and the biggest tech companies, which are worth trillions of dollars, companies like Meta, Google, Microsoft, they literally spend billions every single day on compute, and then they don't even blink. And you're telling me all you're getting is 130 million? I think there's something wrong there. And of course there is. The CEO, well, not the CEO, but one of the main spokesmen for IONQ, Nicola Damassi, sold 100 million worth of his shares in 2025. Why would you do that? If you know, as you claim, that you're sitting on the shares of the next NVIDIA. That's ridiculous. That never happens, and it's not going to happen. People who are buying these companies are unfortunately misinformed. They believe that quantum is some great AI opportunity, but you can't run AI on quantum computers, because the math doesn't work that way. You can't use quantum computing for matrix multiplication, and that's something that you use in AI. And this is technical, and it's not pleasant to read about that. But you have to if you're investing in something like this. If you're serious about investing, if you're serious about trading, you can't just throw money at a monitor and then hope that it goes up. And sure, I suffered a lot in a couple of these days. I lost, I think, a couple $1,000 yesterday, a couple $1,000 today. That's nothing. I mean, it's painful, but I'm going to survive. Thing is, this happens all the time in the market. You get mini bubbles. Before this, you had the 3D printing bubble in 2019. Before this, you had the cannabis stock bubble. If any of you remember, those were all super hot topics in their times. People thought, oh wow, cannabis is about to be legalized everywhere in the US. This is going to be so popular. Guess what? Never happened. Oh my God, everybody's going to be 3D printing, a 3D printer for everyone. Guess what? Never happened. And of course, sometimes you will actually sit down and figure out what the next NVIDIA is. And good for you. But I don't think the next NVIDIA was losing money. Was the next NVIDIA losing 500 million a year? Was the next NVIDIA cash flow negative? I don't think so. That's pretty ridiculous to me. Was Jensen Huang selling 100 million of his shares in the first years of NVIDIA? And guess what too? If NVIDIA was at the stage where they had 130 million revenue and they were barely profitable and they were trading for 16 billion, it would still be a short because it's going to take them years before they get anywhere where they're profitable. And my guess, honestly, is that it's not going to be companies like IONQ, RGTI, QBTS, and QUBT. QUBT and QBTS are not even, in my opinion, quantum companies. QUBT is literally a beverage company turned quantum. QBTS does not have a quantum computer. QBTS is a consultancy company. It's a company that if you contact them, and I encourage you to contact them and try to reach out and use their product, they will follow you up and try to upsell you some consulting service, and they will try to bullshit you into letting them do the task for you, which then they will figure out using normal, average, everyday computers, and they will get back to you with a fee of a couple million. That's how QBTS makes money, and they have no revenue. It's ridiculous. You think Google is sitting there and they're going to be using D-Wave? No, they won't. You think this is what the next NVIDIA looks like? An average of 167 revenue growth in a year? It's ridiculous. Was NVIDIA deeply cash flow negative? No, it wasn't. I hope you know what that means. That means that this company is burning money. This company burned 72 million in a single year. And that's not a lot for them now, because the CEOs are printing shares. Same thing here. Look at the balance sheet. You scroll down and you look at the balance sheet of D-Wave. Additional paid-in capital. In 2023, they had 470 million of capital. Next year, 700 million. And a year after that, 1.8 billion of additional paid-in capital. These companies print their own shares because they know this is a quantum bubble. They know that an opportunity like this is not likely to repeat itself. And they will be printing shares just to secure money to keep on running for the next years. And good for them. That's what a good CEO does. You're not there looking for the chart to go up. You're trying to make the company print money. And to do that, you have to save it from going bankrupt. And to do that, you print shares so that you have money to operate. You look at the numbers of shares outstanding for these companies. 137 million in 2023, 192 million in 2024, 320 million in 2025. What about IONQ? 197 million. In 2022, in 2025, 280 million. And right now we're sitting, that's an average for the year. Right now we're sitting at 366 million. So in 3 years, this company almost doubled its shares outstanding. All of these companies went public through a SPAC, a special purpose acquisition vehicle. Those were things where a bunch of investors put money into a box, They found a manager for the box, and the manager set out to buy a company and to effectively take it public. It was a way for companies that couldn't attract investors on their own to go public. Now, there is no shortage of people that are looking in private equity for opportunities. That's the reason why you have companies like Quantinuum and like PsiQuantum that are thriving, that are doing fantastic. They have the best state-of-the-art quantum computers. I think Quantinuum achieved 99.99 fidelity. That's important in computing because every time you run an operation on a bit, or in this case on a qubit, you have a chance of running into an error. And you need 1,000,000 times of what we have right now of fidelity to run anything on quantum computers. These computers have no memory, they have no RAM, you can't run AI on them, and you certainly cannot do it now. And you won't be able to do it in years. It took us 10 years to go from 99.9 gate fidelity to 99.99. And this is just for some companies. If you think something's bullish for Quantinuum, it doesn't mean it's bullish for IONQ. It doesn't mean it's good for Rigetti. If Quantinuum gets the next deal, it means IONQ didn't get that deal. And IONQ is going to claim that, hey, we got these new deals, we are securing some partnerships with some universities. Yeah, that's what universities do. They secure research and partnerships into the frontier. They're checking on the chemists in the basements that are trying to invent fire for the first time. This is hilarious. Meta, Broadcom, IONQ, D-Wave, Quantum, and Robinhood. Why these 5 stocks are on investors' radars today? Just mentioning IONQ and D-Wave in the same sentence as Meta and Broadcom and Robinhood, companies that are actually growing, companies that are run by people that actually graduated something, that know what they're talking about. The most famous people in the space, Christopher Monroe, the CEO of IONQ, has said that we are 30 years away, not the CEO, the founder of IONQ, Chris Monroe, has said that we're 30 years away from a useful quantum computer. And that's being generous. Scott Aronson, one of the biggest, most important researchers in the field, is publicly laughing at IONQ and Rigetti. And actually, the Rigetti CEO is the nicest guy, the most honest guy around them. He's actually saying that there is no revenue. This is a research project. What are you expecting from us? This is a bubble, and it will go down. There's a famous investor called Robert Wilson, who passed away, who was famous for shorting bubbles like this. I recommend that you go on and read about him. This is exactly the same thing I'm doing. My key point here is I don't know when quantum is going to go down. And days like these, they happen. That's what you can use delta hedging for. That's why you should keep your positions small so that you can actually withstand something like this. If you get liquidated from a, what is it, 30-40% move, too bad. Your positions were too big. I hope this didn't happen to you, but if you did, everybody gets what they want from the market. I will survive. I will cut my positions. I will stay in the market, and I will wait for the corpses of my enemies to float on the river by me as I'm sitting and watching. This is exactly what's going to happen with quantum. Quantum will go to zero. Well, not to a literal zero, but this company, IONQ, has about $10 a share in cash. Maybe their business that they have acquired is worth something now. This is actually another risk. This is against the bull thesis, the bear thesis. These companies are using all this hype to farm money. So they're not as good shorts as they used to be when they were, for example, at first trading on these crazy valuations. If you look at it in Q3 24, IONQ had just $1.79 a share in cash. Now in Q4 25, they had $9. But this can't last forever, simply because there is no free money. Eventually, investors will get bored of getting screwed, just like they were getting bored for the past 3 months. And this is what happens. Shares go up, and absolutely nothing happens because nothing ever happens. Quantum is not now. Quantum is years away. I would invest in these companies if they were trading. Well, I wouldn't invest in these companies because they're run by idiots. But I think Quantinuum is going public this year. You'll have a chance to invest into an actual, real quantum company. You can get exposure to quantum by owning Google, by owning IBM, real businesses with real management and revenue. You don't have to own turds. Just because somebody else is trading turds doesn't mean you should be doing it. These companies are zeros, or rather cash value. And last but not least, this is pretty funny, these are the headquarters of these companies. So this is a headquarter of IONQ. And this is fine. This is okay. $15 billion company, pretty nice building right there. You look at QBTS, this is the headquarters of QBTS. Some barracks on the side of a street. For Rigetti, this. You can actually Google all of this. Another box, another barrack, just a lab. This is a lab where you and your friends and your Uncle John work, not where a $7 billion company is headquartered. And QUBT, the beverage company, this. Not the entire building, just one floor in this commercial building. These companies are duds. They're worthless. They will go to zero. The only question is, will you get liquidated before this happens? I had 2 margin calls today, and that's on me. My positions were too big. I'll figure it out. I will learn how to delta hedge. I will survive, and I will wait it out. The only question is, how high will they go before they inevitably crash? And they will crash because they are worthless companies competing with Google, NVIDIA, IBM, and other private companies that you cannot even name. Because opportunities don't come when they're obvious. This is obvious to everyone. Everyone can see this. You do realize that there is a ton of billionaire guys on Wall Street who are looking at these companies and they're trying to figure out if there's something behind them. If they were, these companies would be getting bought out. Nobody gives a fuck about them. Nobody wants to own this. These companies are duds and they will go to zero. So stay solvent, stay happy, don't leave the positions, decrease if you have to. I will be waiting for Q1 results, which are supposed to come in 3 weeks, and we'll see where this goes from there. Point is, these companies have nothing to do with reality. These are companies that are trading from 100 to 1,000 times sales. They're worthless, and they're trading of vibes. 2 days ago, there was a quantum day, some gay stuff like that propelled these stocks up. The D-Wave CEO was claiming that if he was NVIDIA, he would be scared right now. Sure, I can practically see Jensen Huang pissing himself looking at that guy. By the way, look that guy up. He's got a fantastic mustache. He looks like he looks actually like someone who would be chasing gold in Alaska and on the turn of the 19th century. And I hope he succeeds, but he won't succeed with this company. These companies are worth nothing. Stay solvent, stay in the market. This has been the Impact Factor, and thank you for listening.